Good morning, everybody. Happy Saturday. Today's May 30th, 2026. I'm Pat LaChapelle, and I'm working more on my stock market tool today. I work on this every day. My final goal is to have a strategy such that I can run a script, and it will make buys and sells, make me a high profit in the market no matter what, and I don't have to do anything. So that's kind of my end goal. Last week was a pretty exciting milestone. I started paper trading, so I started working on this project at the end of last year. I've been doing a lot of work. Basically, it required a lot of coding to build up the infrastructure to get to the point where I have a strategy that I think will work. So I have three strategies that I'm paper trading. Here are the results from them right here. And on left is the results. So you see, actually, it doesn't look too good. I have three different strategies. So the first strategy is I have a model to predict returns over the next 5 days. I'm taking that model, taking the best four predictions and the worst four predictions, and going long on the best, going short on the bottom. And that should give us a market neutral strategy. And then I'm taking the betas, the rolling betas of each stock that's in the basket. So of the four longs and the four shorts, I'm taking the rolling betas of each. And then I'm adjusting how much money I'm allocating to the longs and shorts so that it's beta neutral. So if the longs have a really high beta and the shorts have a really low beta, then I would allocate more money to the shorts. So the idea is so that the net should be beta neutral. And then the final step is I'm using hierarchical risk parity, finding the correlations of the different assets, and then allocating money according to the hierarchical risk parity strategy. And so that's this strategy right here. That's all I'm doing. And this is the back test here. So you see the returns were really high, but also pretty high was the drawdown. But this is a simple strategy, and you see the annual return is 40%. So that's really high. So we can actually scale down exposure a little bit to accept a lower return. And then that should lower the drawdown. And this model has kind of a nice property, which is that whatever I set the target. So if I set the target volatility, basically what that's doing is if the volatility of my portfolio moves above my target, it's scaling down portfolio exposure to try to bring the volatility down. And then it's, if it's just barely above the threshold, it scales down a little bit. I'm using a sigmoid curve for the scaling. So if it's way above the threshold, it will scale it significantly. And whatever I set the target volatility to, if it's under 35%, that's roughly my average annual return. And it's also roughly the maximum drawdown. So you see here, the target volatility is set to 10%. The worst drawdown was 10%, and the annual return's 10%. Here at 30%, you see the worst drawdown is 28%, and the annual return is 30%. So this allows me to, with this volatility scaling, I can basically adjust how conservative or risky the strategy is. And so these three strategies, you see red is unscaled, green is 25% volatility target, and blue is a 10% volatility target. And obviously, these results don't look very good. This red strategy has already lost 1.2%, but I haven't closed any positions. So I'm holding these for 5 days. I started paper trading on Tuesday, I believe it was. Let's see, today's 30, so 29, 28, 27, 26 was my first day. So Saturday, 30, Friday, 29, Thursday, 28, Wednesday, 27. Yeah, so Tuesday I started paper trading this model. And so I won't be closing any positions until next Tuesday. So we still have some time for this to turn around, but it's not looking that great. And so basically what's going to happen, and I'm documenting everything by hand in this spreadsheet. So what's going to happen if I keep documenting everything by hand, if it turns out that this strategy doesn't do well on paper trading, then in a month from now, when I'm done with paper trading, the idea is to paper trade for a month to make sure the model works, and then go live after that. So if the model doesn't do well on paper trading, then I'll have to look more into changing the model, changing the portfolio strategy, changing the universe. And so basically I'll lose a month of time because the paper trading's taking me about an hour to document each night. So because of that, my goal for this stream, I might not finish this stream. Really, my goal for the weekend is to build up some code infrastructure so that this is automated, so that I can just run a script every day and say update paper trading, and then it will do that. So that's what I'm working on. Now let me go through and I'm going to... Oh, this is the wrong presentation. Here I'm going to try to develop a layout for this strategy. So yeah, if you're interested in this stock market, algorithmic trading, AI coding, because I'm using AI coding tools a lot, any of this stuff, be sure to subscribe because I'm working on this project every day, and every day I'm improving. So on the strategy, we have these guys: universe, model, and portfolio strategy. And then, yeah, let's think about how we're gonna do this. So let me actually go to the flowchart tool. Okay, so the first thing we have is data. Make this small. You might say this is ludicrous, but Tayo, Cruz, tell her how you feel. Okay, and then from the data, okay, so data objects, let's add in a circle. No, this should be a... Told you from the start, baby, from the start, I'm only gonna break your heart. Let's see, what should we make this? Maybe light blue. So we have data. We have some filters we're defining. Can I draw a shape? I want like a... Alright, so let's call this universe. I'm only gonna break your break. Do I need any description? No. Alright. Let's put a line here. No, I'm only trying to keep it real. I guess I don't want the line there. And I know Conga's gonna get me back for being so cold, eh? Bad to the bone, eh? Hey, it's still alive. Hey, Pat, this is my first time on your stream. Could you please explain what you're doing? Yeah, let me go through... I talked a little bit about what I'm going to be doing today, but I didn't talk about the overall strategy. So let me talk about that really quick. Thanks for tuning in, by the way. So here are my goals. First goal is to beat the S&P 500 by a significant margin. So the S&P 500 goes up on average 6% per year. I want to get significantly better than that, 3 to 4 times better, and get 18 to 24% per year. Now that's my final goal. On the initial models, I'd be happy with just beating the S&P, but ultimately I would like to get 18 to 24% per year, and I want to be market neutral. So the strategy shouldn't care if the market's going up or down, or are we in a bull or bear market. Regardless of what the market's doing as a whole, this strategy should give consistent positive returns. So in order to do that, I'm doing a long short strategy. I'm making predictions on stocks over the next 5 days. What will their returns be relative to the universe average? And then on the best predictions, I'm going long, so buying and holding. And on the worst predictions, I'm short selling. And the idea of that is if the market's going up or down, it doesn't matter. You have longs and shorts. You're positioned on each side of the market. So if the market goes up, then the longs should do better than the shorts, and you should make money. So the magnitude of the long should be more than the magnitude of the shorts, rather. Now I'm writing all of this in Python. So I have a secondary goal for the project, which is to generalize everything and make a tool that anyone can use to create these sorts of models for themselves. And so that's on GitHub if you're interested in that. If you like coding, if you want to do a similar thing, you can get this from GitHub, and you could do everything I'm doing up to implementing a portfolio strategy in under 100 lines of code. And what I'm working on today is I'm adding paper trading to that. So ultimately, you should be able to build a strategy up and then test it live in maybe 100 some odd lines of code. So yeah, if you're interested in that, check that out. The link is in the description. And of course, if you find it useful, please star it. That really helps me out. And follow me on GitHub. Watch the repository. All that stuff really helps me. It helps raise my coding profile, helps me get freelance gigs and coding jobs. So this at the bottom is the outline for the universe. I have data. I found a really good data source. The link for that's in the description as well. And on my GitHub, I give you instructions for how to install it. But I have a really good data source that has data going back to 2011. It doesn't have survivorship bias, so it includes all stocks that have been delisted in the market. That's a really big problem with free data sets. Oh, I should say I have another constraint on my goals. On the secondary goal for the Python tool. So I want, if you start looking into this stuff, it's really hard. I found it impossible to find anything that I could use to build a machine learning strategy for free. There's some paid things where you have to pay a lot of money. And so I want this to be completely free. So it's really important that I find a free data source. So that guy posts his data every day. He updates it. I've been watching it since January, and he hasn't missed a day. So that's a really good free data source going back to 2011. So I have that, but you don't want to use all data in your model. Different things move differently, like financial instruments are going to move differently from common stocks. And so you want to isolate a bunch of the same things. So what I'm isolating, I'm only using common stocks, things like Apple or Tesla, ADRs, which are foreign companies that are listed on the US market, and real estate investment trusts. And that's because all of these have similar price dynamics. And then I'm filtering out everything. I'm getting the top by volume. I'm filtering out anything that's had over a 50% drop in the last year. So once I have that stock universe, I'm feeding it into a model. And so in the model, I'm defining features that I want for the model. So those are like technical indicators, things like Bollinger Bands or MACD or 50-day moving average crossover, things like that. And then you could define how far to look back for them. So say get 20-day Bollinger Bands, 50-day, 100-day Bollinger Bands, etc. So I have a set of features that I'm defining for the model. These are really flexibly defined. That's what I worked on in February, was making the features more flexible. And these are all the features I implemented initially. And I've implemented maybe about a dozen, maybe over a dozen more since I made this slide. And so that's the returns model. Now, the returns model is using a light gradient boosting method to make predictions. So that works really well on stock market data. It's basically a tree-based algorithm. And that works well on time series data. It handles large data sets really well. So we have over 2 million lines in our data set, 2 million rows. And so you need something that handles big data well and handles time series well. So that's what light gradient boosting is good at. Oh, and it works really fast. And so I have a model that I'm confident in. So the final step is to implement a portfolio strategy on the model, take the model outputs, and decide how to allocate capital. So this is the first iteration of the model that I got. Let me pull it up here. Where is it? Here. So this is the first good model I got. So why am I confident in it? So first off, I'm looking at these metrics in the red box. The first metric is the information coefficient, which is telling you about the predictive power of the model. My goal is 0.01 to 0.02. Here I'm getting 0.047, so it's over 2 times as large as the higher end of my threshold. So it's beating my goal by a lot. Next is these next 4 metrics are telling me about the stability of the model. So you want something that has high predictive power, but you don't want something that's really good at its best and really bad at its worst. It should be fairly stable. So we're looking at the standard deviation of the information coefficient. My goal for that is 3 to 13 times the information coefficient. You see here it's at the lower end of that range at 3. The information coefficient to information ratio on a daily basis, my goal is 0.03, so here it's larger by an order of magnitude. On an annual basis, my goal is 0.3, so again, larger by a little bit less than an order of magnitude. And then the t-statistic, that's a statistical thing. My goal is 1.95, and I'm getting 3.75. So it's really good on all of these metrics. This is for a single model that's trained and validated up through 2022, and then tested from the middle of 2023 through the end of 2025. So these are the results for that. And so not only do the metrics look good, the decile analysis looks really good. So this is what we would consider a perfect decile analysis. The bottom decile, the worst predictions are the lowest, the 10% worst predictions are the lowest performing, 10% best predictions are the best performing, and each decile is higher than the previous decile. That means it's monotonically increasing. So this is exactly the behavior we want to see, with the caveat that this is on the Sharpe ratio. So this value on the y-axis here is the Sharpe ratio. So I'm predicting the Sharpe ratio, and this shows that it's extremely effective at predicting the Sharpe ratio. Now remember this about the Sharpe ratio, because that's going to come into play in a second. So my next step was to implement a portfolio strategy on this model. So on that model, it was really easy to get a good portfolio strategy. Almost anything I tried gave me really good returns. Now I also that was for a single model. I also did a walk forward analysis where I trained a new model for every year from 2016 through 2025. And here are the results. So you see information coefficient and annual information coefficient to information ratio is above my threshold every single year. So with 9 different models, this previous one, maybe there's some weird things that made it work well. But here with 9 different models that are all performing well, we can conclude that this is a good strategy and this is an effective model. So the portfolio strategy was easy on that first model, but when I tried that same portfolio strategy on these walk forward models, it basically went negative until 2022. So really bad performance, but then you see after mid 2023, really good performance. So the question is, what's going on here? I tried some different models and improved things a bit. And yeah, I was able to improve things. I actually made it so that it went positive the whole time. But there's a core underlying problem, which is that I'm predicting the Sharpe ratio. So if you look at these, I looked at 3 different regimes. So 2016 through 2019, just low interest rates into the 2010s. 2020, 2021, the COVID era. And then 2022 through 2025. COVID's over, but the interest rates have gone up. So if you look at the returns was negative in these first 2 regimes, but positive in this last regime. And the question is why. So if you look at these decile analyses, the previous one I showed that was really good was the Sharpe ratio was on the y-axis. But on these, the returns on the y-axis. So it's good at predicting the Sharpe ratio, but it's not good at predicting the returns. So why is this? The Sharpe ratio has volatility incorporated into it, and volatility is fundamentally a lot easier to predict than returns. So since Sharpe ratio has volatility incorporated into it, the Sharpe ratio is going to be a lot easier to predict than the returns for the day. So earlier, I chose the Sharpe ratio model because that decile analysis looked much better than my returns models that I was working on. But here here's a returns model on the left, and these are the decile analyses, and you see these don't look as good as the previous ones. So these aren't all monotonic. They're not all perfect, but some years it doesn't look bad. Like 2022 looks pretty good. And you see most years the bottom decile is the worst performing, and the top decile, even though it's not typically the best performing, it's still positive. And another interesting thing is this worked poorly on 2026. So I need to look into that. But then when I tried implementing portfolio strategies on this, it was a lot easier to get positive returns. And I spent several weeks exploring the portfolio strategies. And this is what I settled on. I changed the volatility estimator to the Yang-Chang volatility estimator based on the suggestion of one of my viewers. That was extremely helpful. You see, where's that? The different volatility estimators. So these are the different volatility estimators. The blue one was the original one I was using, so it's really noisy. And I decided to go with Yang-Chang, this red one. It's a lot smoother, and the value is not changing too much over the regimes. The exponential weighted moving average, you could see there's a clear regime shift where it changed here from like 0.22 up to about 0.4 average. This red one changes from about 0.35 average to maybe like a 0.4 average. So that's a lot better. Since I want to backtest going back to 26, like the mid 2010s, I need something that's smooth and volatility over that time. So this was now. So I scaled things differently on volatility, and this model has a nice property, which is that, I should say the portfolio strategy. Basically what I'm doing is I'm picking 4 longs and shorts, so I changed around the number of positions on each side, and I found that 4 performs the best. So I'm going with 4 longs and 4 shorts. I'm taking the top 4 predictions and the bottom 4 predictions for each day, dividing my portfolio up into 5 different sections so that we can hold the position for 5 days, but still there's turnover happening every day. We're buying things every day and selling things every day, even though we're holding for 5 days. So, okay, so that's we have longs and shorts. Okay, so now once we have the longs and shorts, we're taking the betas of the total betas of the longs and the total betas of the shorts, and then we're allocating money to each side so that it's beta neutral. And then the final step is implementing hierarchical risk parity to decide the position sizing. So this is an unscaled strategy with that method that I just described. These are scaled, so I'm lowering down. So you see here the portfolio exposure is always at about 0.8. It's not going to go above 0.8 really typically because on shorts you have to hold some extra capital in your portfolio. So however much you're going short on stocks, you can't, you need some extra cash in your portfolio. I'm not sure, I don't remember exactly how much it is, but whatever it is, I incorporated that here. But here, this is basically full exposure. Now we could scale down on that Yang-Chang volatility estimator, so we can set a target volatility and say if the portfolio volatility goes above the target, lower the exposure of the portfolio. I'm doing that with a sigmoid curve. So if it's just slightly above the target, it's not lowering it too much. But if it's way above the target, then it will lower it significantly. And a nice thing about this is whatever you set the target volatility to, that's roughly your worst drawdown and the average annual return. So here I have a target volatility of 10%. The annual return is 9.8%. And the worst drawdown's about 10%. Conversely, you see here 30% target volatility, the average annual return is about 30%, and the max drawdown's 28%. So you can basically use this volatility scaler to decide how much do I want my max drawdown to be and how much do I want my average annual returns to be. So I started paper trading on Tuesday with these models. sorry, I chose 3 of them. So this unscaled strategy, giving average annual returns of 40%, that's really high, but the drawdown's 35%. So I'm also doing this 10% target volatility, so 10% returns, 10% worse drawdown. And then I'm doing this 25% target. So these are the results so far from those 3 different strategies. So it doesn't look really good, but we're still too early in the process to really tell what's happening. Because I haven't closed any positions. So this is the lines here are moving just according to the current price of each asset that I'm holding. But you see here it's pretty bad. But the unscaled strategy, you see it's much more volatile. Right now it's at minus 1.2%. These guys are at like minus 0.35% maybe. So hopefully they'll go up. But if these don't go up and if this performance keeps trending this way and I end up negative on the month, then I'm going to have to find a better strategy to implement. And currently paper trading is taking me a really long time to track. So I'm tracking it all in this Excel file here. And it's just, I have to fill out the stocks, what their current prices are, the predictions, and everything. I have a script automated to get the predictions, but this tracking them is not automated. So this is taking a really long time. And last week, Wednesday, Thursday, Friday, for tracking the paper trading, it basically took an hour to do this. And that was my whole stream because I was working a lot this week. I didn't do really long streams. But basically, this was taking up all of my time. And so what's going to happen is if this strategy doesn't perform well at the end of a month, then I'm going to have to go back to the beginning, change around the model, universe, portfolio, adjust the strategy to try to get something better. But if I have to spend all my free time tracking the paper trading every day, then I will have basically just lost a month of time. And it's back to square one. So I don't want that to happen. I want to just be able to run a script, update the paper trading results for the day, and leave it at that. So that's what I'm going to be working on today, is implementing, automating that. So before I do that, this is kind of a complicated thing. The code base has become there's just a lot of moving parts to it. So I want to make this layout here, what do you call this? A flow chart to kind of help me conceptually visualize how I'm going to do this. So we have data. That's from our data source. We're feeding that into filters, which is a Python class. So we'll make Python classes green, I guess. And then from filters, we're feeding the filters into the universe. Okay. From the filters, we feed those into the universe, and then we get a universe file. So files we could make orange, I guess. So the universe file, I'll just call this universe data, which is a file, so we'll make it orange. Yeah, so let me know if you have any questions about that. I hope that was a good overview and you kind of have an idea of what I'm working on. I'm taking the data, I'm feeding that into filters. Those are all Python classes. Then I'm feeding that into a universe, which is also a Python class. The universe spits out data for the universe, which is then saved in the repository. So the next stage... Okay, let's make this guy dashed. Oops. No text there. They don't have a dashed line? Oh, there we go. Okay. So next we have universe, and then what do I want to do next? I guess I can do okay, so the model. I guess I'll switch these. Let's put model here. Okay, so I guess I don't need even feature engine at all, because I'll just so we define features. Copy this guy. Okay, so let's think. Filters, I'm defining. Universe is just being generated. So should we make those different colors? So I'm gonna make things that I'm yeah, I'm gonna make the things I'm defining a different color. So those could be that. And then Python classes that are doing the work will be a different color. Okay, so I'm defining features and target. And then these guys are going into feature engine. Yeah, sure, still alive, no problem. Are you interested in stock market stuff? So the feature engine takes as input. First we have universe data. Then we have data. Then we have features are being fed in. And then targets being fed in. So features, target, raw data, and universe data we're all plugging into feature engine. And then the feature engine outputs features. So features, should they be a different thing? All make model outputs. So feature engine outputs features and target. Maybe we'll make that gold. Okay, and then this feature and target data gets fed in. To LGBM model, which is, again, should be green. And then finally we output. I guess that's we output a file. Okay, so this is going into the model folder. Here we'll call this universe data file. Model folder. Okay, so let's put this down here. And then we're going to say that we're training it. I guess that should be big. Let's put this guy in. All right, so let's make the background red. How do I change that? Edit style. Fill color. Nothing's changing that. Arrows. Okay, very good. Yes, Pat, I'm quite interested. I am a finance student. I didn't even know finance was a degree, like an economy student or literally finance. But most of my backtesting revolve around TradingView or C++. I do like your explanation and got interested. Nice. Uh, so what do you, I mean, finance, what do you do in finance? You learn how to like make financial instruments or something? Okay, so we have our model. Now, okay, so once we have model, I'm calling it portfolio, but I don't know. That might not be a good name. I might need a better name. But I'm just going to keep it for now. So, so the portfolio we're taking in data. Can we make an arrow come from this one? I guess I can't. Oh, I forgot. That's why I like this tool. It automatically does the arrows. So we can just do from this guy down to here. Okay, so now we're taking data. We're taking feature engine. And we're taking the universe. Okay, so let's make this bigger. Good evening, Global. Feel good for the model and the diagram? What do you mean feel good? Um, I don't know if I feel pretty good about it, but look, here's the performance. So it's not performing well in paper trading, but I'm holding positions for 5 days. I started Tuesday, and I'm buying things every day. So this is just the performance so far, but I haven't closed any positions. So we got to see, what happens here. Okay, so now we have a portfolio. So I'm plugging it into, I'll call this portfolio strategy. So let's connect that guy down there. Feature engine will connect there. Universe data. Do we also need the universe, right? What? Salt water? Petrol is really volatile right now. Okay, so we have portfolio. And then we're also taking the model. So move this down a little bit. Maybe we could just... Maybe we could move this over here. Move that down. Okay, so we're taking universe data, the model, real data, and then the feature engine to get the portfolio. Yeah, well, you said petrol, so I just went with you. Actually, people in America, people used to say petrol. And then somehow it got changed to gas. I don't know how. That was like some manipulation, some social engineering from the fossil fuel companies. I saw a YouTube video in which the girl looks just like Arya Stark from Game of Thrones. I sort of got... I've never seen Game of Thrones. I have no idea who that is. All right, so universe, model, portfolio strategy. Let's make that dashed. It would look better, I think. Okay, so is that everything we need for the portfolio? Yeah. So now we have a portfolio strategy. We're creating a portfolio. And then we're taking the... Oh, the universe actually isn't fed into the portfolio, is it? Because we have the model. We're getting the universe from the model, so we don't need to worry about that. And then... Okay, so that's where I'm at right now, but... The portfolio strategy does output a portfolio folder. But it's just giving the results for the back test. So maybe I could just include in there the other. Now, should I make the same thing but make it sideways so that it looks nice on a... Let's make a copy. Let's call this... Rename it. Horizontal infrastructure. Okay, so we're starting with data. Feeding that into the universe. Filters go into universe. Universe goes into universe data file. Okay, then universe data file. All right, so universe. From the universe, we're outputting a universe data file. It goes into feature engine. Okay, so let's put this guy here. Okay, then universe data file gets plugged into feature engine. Okay, so we have to connect that. Okay, then data. Okay, so some data is going into the feature engine. Then we have features and target. Oh, I swear to you, I'll be there for you. This is not a drive-by. Everything is groovy. Oh, I swear to you. I swear to you, I'll be there for you. It's training, and then we're outputting it to the model folder. I saw a video that said teenage boys beat Swiss women football team 7-1. Yeah, those things are always happening. There was like the U.S. women's national team got beat by some like teenage team from Houston. The boys waiting for the moment where the opponents exchange shirts. That's funny. I thought Americans... Oh, we already addressed that. All right, so we've got the model folder. 1, 2. One up. Okay, and then the model folder we plug into the portfolio. So we need the model folder. Really, that's it, right? What else do we need to plug into the portfolio? So here I'm saying model folder plugs in, data plugs in, and feature engine plugs in. So we should say that data plugs in. Get rid of that guy. Now let's plug model folder into portfolio. Save. And let's export as a PNG. Okay, so here we go. That looks nice, so we can just put that in. Okay, very good. So there we go. So what do we need in the portfolio folder? Oh, this is things that we saved. So oh, this guy should move up. Well, so that's the general thing. So we don't need to worry about training the model. We do need to save the portfolio strategy. So we should read in the portfolio strategy. Let me look. My mom called me, so I'm gonna see if it was something important. Oh. So what's today? Let's look at calendar. All right, so what do we want to do now? We want to think about how to build up the live infrastructure. So we have this. I think I need to let's look at how portfolio's saving. Or actually, let's just look at one of the portfolios. Because I think we actually just need to. We're saving the portfolio. Oh, portfolio strategy. Okay, so both of those should go into the portfolio folder. So in. No, I don't think that's actually how it's working, actually. Work. Okay. How do I get to work? Okay, stock market tool, data, portfolios. Info. So in info, we have the models. That's right. Okay, so it's actually a little bit different. We have the portfolio folder is coming out of portfolio. And then we plug that into portfolio strategy. So what we want, all right, so let's make this guy. So now let's say, let's make a live infrastructure section. And then let's put a, how do I, maybe I could fill it. Can we center this guy or no? Okay, so now for live trading, we're taking as inputs strategy. So what do we need to know? Data is always the same. So really we just need the strategy folder. We need the model folder. So then we need to update the universe. So yeah, the universe, how do we flexibly define the universe so that we can update it? So in the model, we're specifying where the universe is, but the universe is just a file. The universe should be its own folder. Okay, I'm going to go to the bathroom really quick. I'll be right back.
a good boy.
All right, let's think now. What do we got to do? What do we got to do? All right, so live trading. We need to change around how things are working a little bit. Let's think. Let's use our brains. So the universe needs to be saved so that we can call it and update it. Okay, so we're going to have to change things about a little bit. So let's get going. You guys got any music suggestions? We're going to have to write some code. Okay. Brooklyn. Now I'm down in Tribeca, right next to De Niro, but I'll be here forever. Clean analysis, or are you? Here we go. Okay, so let's go to universe. Right there up on Broadway. Started writing a market cap filter. I forgot, but I don't know how to implement it. Okay, so let's write some to-dos so I can track my progress. So let's do 2025, note up to Tata. 5/30/2026, to-dos. Okay, so first thing we want to do is finish making flowcharts, which make sense. Update universe so it saves to folder. Update everything in model and portfolio so they work with the new universe. Catch me at the X with OG at a Yankee gang. Let's say put here number 1 model, 2 do portfolio. Next, update model and portfolio. Is there anything else? No, though, that's just the first thing. So, okay. Wait, hold up. The universe? I take this back. Whoa, 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 whoa. We don't need to change the universe because we're only updating it on the 1st of the month. So let's see. Girls need blinders so they can step out of bounds quick. The sidelines is. Gotta become worse. Don't bite the apple, Eve. Caught up in the in crowd. Now you're in style. And in the winter gets cold and vogue with your skin out. The city of sin, it's a titty on a whim. Good girls gone bad. The city's filled with them. Mommy took a bus trip. Oh yeah, I forgot. I was gonna try Claude because Sir Night Night says it's better. Opus 4.8. Does it make sense to use to update my universe for my stock market model at the 1st of each month, or should I update it every day? One hand in the air for the big city. Okay, so back to the flow chart. We could actually just put a list in here. So let's say no. Tone of heart. Left, right, left. So what's a process? The process, manually defined outputs. Absolutely have to. I'm supposed to set an example. All right. So we have data update. The first step. So do I have a... I guess I could make it red because that's what I'm making the process. When I was all over TV, down talking to a man who literally saved my life. Like, fuck it, I understand. What's it called? Let's, bum 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 ba dum bum ba da 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 da. Alright, so data retrieval. So we'll say we did it using data retrieval slash setup data. And he's inherited mine, which is fine. Ain't like either of us mine. I have none of my people heard or murdered. It ain't words that I can think of a perfect way to word it. Don't get it twisted. It's not a plea that I'm copping. Okay, so now we've updated the data. We have model, strategy, and universe. And I'm not going to worry about automating the universe because that'll be, easy to update. Oh no. Let's change this. Because I want to save the parameters for the universe. Okay, strategy. Okay, so I'm going to make a new class. We're going to call it Live Trader. Now, what color should we make predictions? Something, maybe we could make these guys different colors. Something a little more muted. And then let's... we'll just say that outputs universe predictions. Do I just call it positions? Okay, then once we've generated predictions, what do we call this? Progress tracker, returns tracker. I'll just call it tracker. All right, so for the tracker, what do we need? We need to get the open positions for the day and save them. Yeah, so those all go into a single strategy class. The strategy class takes data and then outputs open positions for the day. So let's copy this guy. And here we can say, I want to live good. Hey, love it, underdogs on top. Okay, so let's think. We're making a strategy. Strategy's outputting open positions for the day, but I think this is good for now. We could figure out the tracker later, because right now I need to update the stuff at the top. So, what if I just take... I don't know, that's a little confusing. We ain't real, we ain't got to pretend the cold world that we in. No, not for me. Now listen to gang. Alright, so now we have open positions. Once we have open positions, so each strategy, yeah, I should be able to make a new tracker. So let's say this is the tracker. Python class. And then it outputs okay, then strategy tracker. So this should output open positions for the day, as well as we're only gone every time I give it up. You made me beg for it till she give it up, and I say the same thing every single time. You the fucking best. You the fucking best. So we not only get open positions. I'll be over there, shawty, I'll be over there. You ain't even know it's there. Like the last slice to the fast life. Sweatpants, hair tied, chilling with no makeup on. That's when you're the prettiest. I hope that you. How do I change? Oh yeah. Drake alone. Cause baby, you my everything. Strategy tracker. Open positions. And then this guy should output. And then we use the strategy folder. And we want the returns plot, which we can make, I don't know, blue. We have light blue, we don't have royal blue. Returns plot, maybe I could make that a different shape. No, it's fine. All right, so that's it. I think I'm happy with that. Now I need to go in and change how the universe is working so it saves to a file. Oh no, we don't. Yeah, I need to save the universe to a file so I know how it's saved. If anything changes, I mean, it should be repeatable, right? So Everything happening today. You don't know whether you're coming or going, but you think that you're on your way. Okay, so universe. We want to save how the universe. So that's our first step. So universe. So all the filter functions should now have a save function. Filter. So when we're saving it, we want to specify what? We want to specify the file name, which should be a string. And then maybe all right, so that's good. Then we need same thing, but it will be create. Okay, so we need something to save the filter, and we need something to recreate the filter from the file. So saving the filter, we can save name. Okay, let's try giving this to Claude and saying what I want to do. So for most models, monthly reconstitution is right default with it, but with a daily safety valve. The two questions: how often do I redefine it? Okay, I'll leave that out for now. That's a more advanced thing. So I have defined a universe class in clean analysis .py, which takes in filter classes. The filters have a general superclass, and then each specific filter should have what's that called? Implementation. What do I call that function? Apply a unique name and an apply function which applies that filter to the data. I would like to also add methods included in the file, but without any logic, which allow me to save the filter to a file and open the filter from a file. This would make it so that no, I don't, who cares about the purpose? That's what I want to do. Is this possible? If so, tell me how to implement it. Oh, wait. I can just pickle it. Duh. Alright, so we go to feature engine. So, okay, let's go back to here. So in model, where am I defining the features? Let's check the GitHub. Have I changed anything, first of all? Anything significant? No. What is this? Oh. I added market cap filter, so let's save this guy. Oh no. Okay, so for in model, add target, add features, split data, generate targets and features, train model, test model, evaluate model. Oh, so I don't have a save function. Okay, so each time we're adding them, we're saving them. So, okay, the save logic is implemented in the model class. So in the universe class, or no, in the feature class, we can say if save equals true, save it to the file name. That's pretty easy. So back to the features. So the base filter, if I want to save it, let's do this. So we don't want to, we just want to save self. Okay, now when I'm reading in the features in portfolio, open. Get model predictions. Trained features equals self.model feature name. Cross-sectional prediction, drop unnecessary. Pickle. So we'll say with open fname as file we're going to try feature filter. I mean, how do we load self? So not in here. We want to say this should happen in the universe. So price filter, advanced stats filter. Add filter. Get universe for month. Get all universe data. So let's add a function for saving universe. Okay, so filters, where are we passing those in? Add filters. So when we're saving, we want to save filters, save all OHLCV file. No, because it's always calling from all OHLCVs. So we just need to save filters and save universe data. So in Universe Explorer, what am I doing? What did I hear? Oh, okay, then I'm saving it to Feather. So, save universe file. Okay, so for saving filters, we want to say os.makeDirs, and we want to make folder. Now, model folder, okay, exist okay equals true. So for universe, we want to say make full word, make dirs folder. Ouch. Oof. Oh man, that hurts. Ouch. Okay, so make dirs folder. Filters. And then we'll say for filter in self dot filters pass and then let's see, how are we saving the features? Is it just numerical? Oh, these are portfolios. So if we go to models, we have, let's go to model 22, features. Yeah, they're just named incrementally. So for C feature in enumerate self.features, we want to get every feature and save it. So let's do this with open. So here it should be folder slash filters slash c.pickle as f pickle.dump dump feature So when we're making the universe, we need to specify the master df. So that should always be the same. Oh no, is a data frame. Okay, so up here I'm specifying df. So we can default this to none, and then we can say if type of master df is equal to type of none, then get the master df. Self.master df is equal to this. Otherwise, now if we say add filters, so in save, we're saving let's get rid of that. Okay, so let's add a flag. Say self.universe is equal to true once we've retrieved the universe, and then when we initialize, we can say self.universe, self.hasUniverse, I think I called it. Self.hasUniverse equals true. So up at the initialization, we can just start out by saying that hasUniverse is false. So once we get the data, we'll set hasUniverse to true, and then if self.hasUniverse is equal to true, this shouldn't be feature, that should be filter. Okay, so if we have the universe, go ahead and save it. So now we could just say self.universe data is equal to self.universe data is equal to universe dot get all is equal to no, let's just save it. dot to feather. This should be an if. So if we have it, save it to feather as f string. We're going to say folder slash universe dot feather. Okay, so now we're specifying a universe folder, not just a file. What else do we want? Okay, so save filters and information. So first here we're going to say pickle the filter, and then down here we're going to say save filter info. So what's the relevant information for the filters? So I guess I want to save the name and all properties in each filter, but all filters have different properties. Is this possible? Put that in. Let's add file. And we're gonna add scripts, clean analysis. Okay, so that's it for right now. I'm going to do another stream later. If you think this is interesting, don't forget to subscribe. Tune into my stream that I'll be doing in a few hours later today. If you want to create this sort of thing for yourself, you can do the whole strategy that I'm doing in under 100 lines of code. So check out the GitHub. The link's in the description. Download it, fork it. Let me know how it works. Let me know how I can improve it. And of course, if you find it useful, please star it, watch it, and follow me on GitHub. Because all that stuff helps me out a lot. And of course, join the Discord. The link for that's in the description. And that's it. Yeah, don't forget to subscribe. So have a good rest of your day. If you want to tune in later, I'll see you then. Adios.